Welcome to another episode of Equity Mates. My name is Bryce, and it is that time of week, as we do every week, Watchlist Wednesdays, and as always, I'm here with my equity buddy, Ren. How are you going?
I'm very good, Bryce.
Watchlist.
Very excited for this episode. Watchlist Wednesday, best time of the week.
Yep.
And we have a great expert joining us. And, you know, we've been talking about infrastructure a lot recently. We did an episode on the podcast.
Yep.
We did an episode on AusBiz about the thematic of infrastructure last week. But look, we don't know a lot about it.
No.
And that's why we're getting experts to help us understand a whole other world out there. And this week, or this episode, we're going to continue that exploration with Watchlist Wednesday.
That's right. It is our absolute pleasure to welcome one of the infrastructure experts here in Australia, Sarah Shaw, to the show. Sarah is the Global Portfolio Manager and Chief Investment Officer at 4D Infrastructure. Sarah, welcome to Equity Mates.
Thanks very much for having me.
So, Sarah, as Alex said, we have been chatting a bit about infrastructure, and we would love to get your views on a few stocks that are perhaps on your watch list or some thematics that you're exploring at the moment. And let's start with one that you sort of sent through before the show, and that is the energy transition that we're going through. And look, I would try to pronounce the name of this stock, but I'll leave it to you. Let's start with energy and then perhaps talk about one of the stocks.
Sure. The energy transition and the decarbonisation thematic is a multi-decade infrastructure investment opportunity that investors can gain access to. And clearly, the world is on decarbonisation and sustaining the planet, that we're all relying on it. And historically, probably infrastructure has been part of the problem. But without infrastructure investment and energy transition, we are not going to see a more sustainable planet. We're not going to see net zero, which was a global aspiration. So it's an investment thematic that we're very excited about. Energy transition, energy it's at the moment accounts for 25% of carbon emissions around the world. So just moving away from carbon intensive energy is going to have a huge impact on the planet. And we're really focusing on stocks that are capitalising on that and capitalising on the government prioritisation of energy transition. And the one you mentioned with a hard pronounced name is Iberdrola. It's one of our top 10 positions, and it's a real energy transition leader or green leader. With just announced plans of 75 billion capex over the next 5 years just in energy transition. And that number grows to over 150 billion by 2030, just in the greening of the economy and the energy shift. So really exciting opportunity that we're looking to capitalise on as the companies capitalise on.
So Sarah, it's a fascinating thematic and one that we are hearing more and more these days in the Equity Mates community, but definitely the broader investing community as well, this transition to a greener economy and a greener energy grid. Can you tell us a little bit about what in particular, now will I get this right, Iberdrola is investing in? Like are there particular sectors of the electricity grid or particular countries where they're investing that capital?
Sure. Iberdrola is a demographically diverse, integrated, regulated utility based out of Spain. It has exposure to the core green markets across Europe, being Spain, Germany, the UK. It's also in North America, and it has assets in South America, in Mexico and Brazil, as well as here in Australia. Now, it has exposure across the entire green energy chain, so investing in renewable energy itself, so the solar plants, the onshore, the offshore wind, battery storage and green hydrogen, as well as the grid, so the transmission and distribution networks which connect that energy to the users such as ourselves. So they are demographically diverse as well as across the entire value chain of what is the energy transition and the electrification of energy usage.
We obviously explore infrastructure. There's no doubt that airports play a massive role within the space, debatable between Alec and I, but we'll leave that for another time. So let's move to airports. What are you seeing at the moment in terms of airports and in infrastructure, and particularly, are there any European examples that you're closely looking at the moment?
Sure. Clearly, look, airports had a horrible 2020. The grounding of flights during COVID had a really sharp immediate impact on airport revenues, and they are a high fixed cost business. We like that in infrastructure. So the impact to the bottom line was very significant. However, the equity market moves in response to that were more than compensated for any 1 or 2, 3 year earnings loss. We have to keep in mind that these are infrastructure assets, they're very long dated assets, 50, 60, 75-year assets. So an earnings hit of 1 to 2 or 3 years even doesn't derail the airport thematic or their airport earnings profile. So we see significant value sitting in airports globally at the moment. We do like the European airport story, and in particular something like Aena, which is a Spanish airport group, as they are very sort of correlated to the reopening of the European economies, the removal of restrictions, the rollout of vaccines, and really just getting planes and people back up in the air. And just to give you a little bit of a data point, the day that Boris Johnson basically announced the reopening of the UK economy or the exit of restrictions, low-cost carrier tickets on that day were up 600%. So there's a huge pent-up demand to get back out there and travel. We don't think the structural thematic that was airports is broken. So they are really highly correlated to the recovery story, which we're hoping to see come through in 2021, as well as being completely oversold. So there's a significant value opportunity there for investors.
Now, Sarah, you mentioned that you like the airports as a class of infrastructure due to the reopening thematic, and you said you like European airports in particular. Is there anything that the European airports are doing differently to their, American or Australian peers that makes you like the European airports more?
Yeah, look, I think taking American airports out of the equation because they're not listed, so they're not in the listed operators' hands, so there's no real opportunity set there for us. And I think the big difference, say, from the European to say the Australian or the Asian airports is just the reopening of airspace. Look, I don't know, it doesn't seem that very likely that we'll be welcoming lots of international tourists here into Sydney this year. Whereas in Europe, they are looking to reopen airspace. They are looking to get passengers back up in the air. And considering there's a lot of airports with high exposure to domestic or continental European traffic, that recovery story just looks a little bit faster than what we're going to see here in Australia or in Asia, where we're sort of keeping our borders closed for longer.
Yeah, that's it's fascinating. Certainly something to keep an eye on as Australia does open up their borders to see what happens with the Sydney airport and down in Melbourne as well. Sarah, so the third and final, topic that we wanted to touch on today was Cellnex, a stock that I'm assuming you'd sent through that is a tower operator over in Europe. So are you able to give us some more information on what they do and why they're on your watch list?
Sure. So Cellnex is our largest portfolio position, and it's a thematic that we have always had exposure to, and I think COVID highlighted the need to have exposure to communications infrastructure, the need for data and increasing usage of forms of communication has really highlighted the need for deep and strong infrastructure to support the usage. Now, Cellnex is the European equivalent of what you sort of see in the Americans, American Tower or SBA, which a lot of people know. Cellnex is a first mover in the European market, and it's taken the opportunity to consolidate the tower market in Europe as the operators such as Vodafone are selling off their towers in order to fund or drive their 5G rollout. So Cellnex is very well positioned to consolidate a number of European markets. It's building out its tower portfolio. It's creating a very strong position to drive the data usage as we move forward into sort of decades of increasing communications. We like the story because of that organic growth as well as the consolidation of the M&A very, very strong management team executing on their strategy. And it's just, it held up very well in COVID, but we still see a significant runway of opportunity to see further stock outperformance moving into 2021.
Now, Sarah, looking at the three, I guess, big thematics that you've spoken about today, so the energy transmission, which Europe is obviously leading the world in, airports where you particularly like the European, the European airports compared to maybe the Australian Sydney Airport or Auckland International Airport, and then Cellnex, a tower operator in Europe. Is there something about European infrastructure that's, I guess, more attractive or has better economics or has better value propositions at the moment than some other infrastructure assets around the world?
I think, you can see that we are overweight Europe just from the conversation we've had today. We do believe that the stimulus programs that are coming through and actually starting to flow through the economy, the diversity of exposure that you can capitalise on in Europe, from communications to airports to the energy transition, is very attractive. That's not to say we don't see other opportunities elsewhere. We do have exposure to emerging markets. We're overweight in emerging markets, and we also have exposure to North America as well. But we do see that the combination of undervalued stocks, as well as the growth potential supported by stimulus and the infrastructure thematics, really does support the European story at the moment.
That is all we have time for today, but it's obvious that there is a lot of opportunity for investors in infrastructure over in Europe. Even one of the experts we spoke to last week was speaking about this transition that is certainly occurring and being led by a lot of the companies over in Europe. So we very much appreciate you coming on the show on Equity Mates today and sharing your stocks with us. And we look forward to bringing you back on to check in what's going on with infrastructure later on in the year.
Thanks very much for your time and the opportunity.
No worries, we'll talk soon. And that does bring us to the end of another episode of Equity Mates. We hope you were able to take something that was of value for your investing journey. No doubt that infrastructure plays a pretty important role in portfolio construction for many investors in our community.
Well, it has certainly played an important role in content construction for us over the past few weeks. We're not going to quite become infrastructure mates yet.
No.
Because tomorrow we'll be back to talk stocks again, equities.
Yeah.
And we'll be talking to a couple of relatively new investors about the plight of a beginner investor, shall we say, the journey of a beginner investor. And we'll be leaving the audience with some key takeaways for wherever you are in your investing journey. So until then, hit us up at www.equitymates.com. You never have to say the www. Or email us at contact@equitymates.com. But until then, thanks for watching and see you tomorrow.
See you then.